Inflation just came out. It came out before the market opened. When it came out, the markets plummeted, but now we're in positive territory, guys. I love talking about these kind of topics, not because it's going to sit there and determine what I do today, but it's sitting there just to understand where we are in the economy and what people are worried about. Guys, if you want to engage me, I'm very active on Twitter. I tweet many, many times a day. I really like to talk about the economy. I already tweeted about CPI, so follow me here on Twitter, the Twitter machine. Say hi. Love to hear it from you. So let's go check out what happened with the CPI. So U.S. consumer prices leapt 0.6% in August. That is very large. That's the biggest increase in 14 months. But if you watched our past videos, we talked about how food and energy prices were going lower and lower and lower. It had fallen so much, so quickly, because they're highly volatile. So what drove up prices this time? Energy prices. So if energy and food prices are set aside, core inflation, which is inflation minus food and energy, rose a smaller 0.3% in August, which is about 3.6% a year. Okay, not bad. Now remember, the Fed, when they say their target is 2% inflation, they are talking about core inflation. They're talking about inflation not including food and energy. That's very important for you to understand that they're not talking about overall inflation at 2%. They're talking about core inflation at 2%. Now, obviously, it was still a little bit above, but the yearly inflation rate moved to 3.7% last month from 3.2% in July, and the 27-month low of 3% in June. But why were those CPI numbers falling so hard? Because food and energy had fallen so hard as well with it. And I'm going to take a look in just 2 seconds about the CPI numbers in every category to show you guys. But what I really want to go through is the annual rate of core inflation decelerated to 4.3% from 4.7%. That's a big drop, and that's probably why the markets went up a little bit, because this core inflation kept dropping, but it's still far away from the 2%. So when the Fed comes out and says, hey, we don't think we're done yet raising rates, this is why. Because their goal they've stated is 2% core inflation. And I want to repeat that till I'm blue in the face, because I want everybody to understand that. So let's pull up the exact Bureau of Labor Statistics report. Now, let me make this, I don't know if I can make this bigger or not, but all items last month, August, 0.6%. But look at the biggest jumps right here. Energy overall was up 5.6%. Guys, look at that. So 5.6%. The previous month was 0.1, 0.6, a drop of 3.6, 0.6, a drop of 3.5. That's how volatile this stuff is. Look at energy, gasoline and fuel oil. 10.6 and 9.1% increase in August. That is huge. That is absolutely huge. Food wasn't up that much, only 0.2%. Okay, not a big deal. It was energy that drove things up. And you probably saw that when you saw crude oil just kept going higher and higher and higher. And you see it at the gas pump. These are the things that greatly affect. Now, another factor in here is the cost to live, rents and things like that. That makes up about 40% of CPI. Rents and housing make up about 40% of CPI, like I was saying. It's the shelter part right here in services less energy services. Only up 0.3, but for last year, 7.3% increase. That's big, guys. Now, the rent portion was much higher than that, but the reason it was only 0.3% is because the mortgage part is still low because people are paying low mortgages. 90% of mortgages are still sub 5 or 6%. So when people have these low costs, it's not going to drive up this, but overall rents are up a lot, and that really drives a lot of inflation. So where do we stand from here? Guys, I think we have to be realistic that apart from a massive, massive slowdown in the economy, really dragging down inflation, I think higher rates are going to be in the future still. How much higher? I have no idea. But if I were to bet, I would say they're going to go higher from today. But here's what's interesting. You look at the S&P. The S&P is at 4470 last time I checked this morning. Back in March of 2022, March 13th, before they started raising rates, the S&P was at 4460. We're higher than we were when the interest rates were 0%. So you have to ask yourself, is this sustainable? Because the big fear back then was higher rates. Higher rates, if I can get, now I can get a 90-day treasury. I can put my money into 90-day treasuries guaranteed by the US government for 5.45%. If I can get that, when a year and a half ago, it was 0%, If I can get 5.5% now, what return do I need on my investment account to justify taking money out of 90-day treasuries, a guaranteed 5.5%, to put into equities, which has volatility? And that's why increased interest rates can hurt asset values. When you look at real estate, interest rates 2 years ago for buying a home was 3%. Now it's over 7%. That affects asset values. Now, we have seen real estate prices go up, but mostly because of a lack of inventory and inflation. Because when you have a lack of inventory, more people are trying to buy the lower number of houses. We have 1 million houses for sale now, and 10, 12 years ago, we had 4 million houses for sale. And you sit there and look at inflation. When costs of goods and labor go up, it costs more and more to build or renovate a house. So what's going to happen to home prices? They're going to go up. Now, there might be less demand for it, and mortgage demand has absolutely decreased, especially in the refinance area, but a lot of it has to do with low inventory. So I'm not here to sit there and say this is what's going to happen. That's completely impossible. But I'm just trying to explain on this channel some of these things and how they affect you. At the end of the day, they shouldn't affect you at all, because if you look at history, look at the last 10, 20, 30, 40, 50 years, we've been through ups and downs. We've been through major inflation, high interest rates, and guess what? The U.S. economy continues to get better. The only thing that worries me long-term is the amount of debt this country has. That really is concerning for me. That's taking away from the future. That's absolutely taking away from the future in order to get satisfaction today. And that is a reality. Now, could it end up being okay? Sure, but what has to happen for it to be okay? That's the main question we have to ask. Inflation, listen, I'm very fortunate inflation hasn't affected me as much. And for you, I want you to have the ability to inflation not to affect you. It's very simple. Live well within your means. If you save 15, 20% of your income, which everybody out there can. I don't care what your excuse is. Everybody out there can save 15 or 20%, just about making sacrifices. Then when inflation rears its ugly head, when we have a recession, you'll be able to stomach that a lot better. That's all I'm saying. Now, might be easy for me to say, I get that. But at the end of the day, I know people who make $50,000 a year and still save $15,000 a year. That's 30%. That's $50,000 before taxes. So at the end, you have to make decisions for yourself. That's what we're trying to do on this channel. We're trying to sit there and just lay it out and say, hey, here are your options. If you're watching this channel and you make a lot of money, inflation is probably not going to affect you very much, right? Of course. But when I look at these things, inflation affects everybody, especially with energy, especially if you have a business. If you have a business of transporting things, you're seeing that big time. Everybody sees that. When it comes to travel, things like that, it's still going to affect you, but it's going to affect some people more than others. And I want to sit there and set the mentality on this channel of we're in charge of our future. Nobody else is going to care about your future except for you. Be in charge of it. Don't blame somebody else for what's going on. And the fact that you're watching this video tells me you're probably not going to be somebody who blames others because you're here trying to learn, right? So, guys, I appreciate this. Do me a favor, subscribe to the channel and share this video with somebody else who might really need to hear it.